Hi, and welcome to the Stake Beginner's Guide to Investing in Property. So in this video, we're gonna, if you're someone who has real ambitions to start investing in what we think is an amazing asset class, which is property, it can be quite a daunting and steep learning curve if you have no background in it. And we're very, very lucky to be joined today by one of our founders, Rami Tabbara, who you've been in the property market now for over 15 years.
Yep.
You've been maybe one of the most high-profile people in Dubai property. You know the market inside out. If there's anyone that I know that's probably better placed to give advice on what to do, what not to do, it's you.
I hope so.
It's a big build up. So look, okay, I think a good place to start is just, you know, if you're new to this, where do you start? How do you start that process of learning, researching? What's your first move?
Well, I think, before you invest in real estate, you need to set your goals on why you're investing in real estate.
Yeah.
People say I want to invest in property, but before you actually invest, you need to know and understand why you're investing. What outcome do you want to achieve by investing in real estate? And I think once you set your goals, is it a short term, long term, and some people believe that you can make money in a short term in real estate. And I think one thing that people need to keep in mind is real estate is a longer term investment.
Yeah.
So once someone outlines what they're looking for and what their goals are from investing in real estate, then it comes down to identifying what's their budget, and then that breaks it down to location and developer. So my advice is always, when you're looking to invest in real estate, highlight what you want to get out of it. Is it rental proceeds? Do you want to believe in the capital appreciation? Do you want to buy something that's ready or off plan? And then understanding what your budget is. Once you find out your budget, do you need a mortgage? Do you not need a mortgage? And then you can limit it down to locations. Information in Dubai on the real estate market, when I first moved here, there was no information. I think that's really improving. So there's a lot of data that you can get online to figure out in terms of what the pricing is, payment plans, average yields. You can get that, and then you can start limiting to what locations you want to go to. My advice is always go for reputable developers. There's a lot of developers in Dubai, and some of them fall short of delivering on their promises. So it's very important to focus on the right developers, and then...
That's if you're buying directly from a developer.
If you're buying directly from a developer, of course. Now, if you're buying on the secondary market, you have to make sure that you're still buying from a reputable developer, but making sure that the property is in good condition.
Yeah.
Going through brokers that are certified. There's a lot of brokers in the market, so you need to make sure that you do the homework on the broker that's representing the seller. But then quickly identifying if the asset is in good condition, and the price that you're buying it at compared to what are the recent transactions in the secondary market, which you can get from the land department.
That's interesting. So that's really, really good information, because I think a lot of people might not be aware of that. So when you're doing your research and you want to get that information from the land department, how do you get that?
Well, you see, it's on their website, but there's a lot of data providers right now that you do that for you. So you can go to places where a company that we work with, which is Readymade, who provide that information.
Yeah.
You also have on Property Finder, where you can go online and you can check what the prices are, or listing prices, and they show you what the trends are. But I think it's very important that people do that, because it's always in the broker's interest to try to sell the price at the highest, while on the secondary market, there's transactions are closing less than the listing price. So you need to be aware of that. And you can go to data providers, the land department, as I mentioned, and there's a lot of brokers right now that actually offer that data on their platforms, so you can get into that. So my advice is definitely, before you invest in anything, make sure you're buying it at the right price.
Okay, so buying at the right price, data's out there, making sure that you're not going to buy too high, because then you're not going to be able to generate that exit revenue when you sell.
Exactly.
And
your yields will become compressed if you're buying it at
your
too high.
Yields become compressed. Okay. So then there's the decision of choosing whether or not to buy off plan or buy built. So that's often a big decision. I know you've got some pretty strong viewpoints on buying off plan versus ready-made, but let's talk about the two options. So why would you do one versus the other? Maybe you wouldn't do one versus the other.
I think the main difference between off-plan and ready today is the fact that off-plan that you're buying, you know, the secondary market today gives you an opportunity where you can make immediate yields.
Yeah.
And the pricing on the secondary market today is close to replacement cost. And what I mean by replacement cost is you can actually buy stuff in the secondary market today for cheaper than it would cost to build.
Wow.
So, you know, those are fantastic opportunities that are available in the secondary market. Now, but it also goes down to your budget, which is what I said in the beginning, because if you're buying something in the secondary market, you need to fork out that money immediately. So whether you're paying it cash or you're getting a mortgage, you have to be able to you know, commit to that immediate financial layout. In Offplan, usually the developers today are giving much longer payment plans, you know, 6 years, 5 years, and sometimes, you know, they'll give you even 10-year payment plans. But the problem is that in the Offplan is you have to wait until you see any returns coming back. You know, my advice is there's a huge opportunity in the secondary market today, which is what we're focusing on in Stake, that you should go for secondary market, a ready property rather than Offplan.
Ready property.
Yes, ready property, because you know the pricing is fantastic. You can make yields automatically. The interest rates are very low right now, so if you can get a mortgage, you know the interest rates are very competitive. So definitely, I would advise any investors go for ready property. There's amazing opportunities in the secondary market, and even from developers, they have ready property today.
Yeah, you can buy directly
from them, but you need to make sure you're getting it at the right price.
Yeah.
Because you know developers need to, you know, it's very hard for them to match the secondary market. So try to negotiate with developers, because today they're in a position today where they can actually give you better pricing than they were before.
If you decide to go down the route of working with a broker, how do you pick or choose a broker? Like, what does a good broker look like?
I think you need to look at a couple of things. You know, first of all, experience. How long have they been in the market? Because I think over the last 4 to 5 years, you've had many brokers come out and set up, you know, ex-salespeople or ex-sales managers or sales directors open up their own brokerage. You know, but again, you need to look at experience. You need to see how long have they been in the market, and which developers they work with, because you know developers are working heavily with brokers, and they choose, you know, it's their brand name at the end of the day, so they tend to choose a handful of brokers that they would like to partner with. So I would definitely look at how long they've been in the market, the team size, how many offices they have, but as well which developers they work with. Because if they're working with the top, you know, 5 developers in Dubai, then you know they're solid, because you know a reputable developer won't put his name with a broker that isn't solid. Okay. So those are the main things I would look at when working with a broker.
And what about when it comes to negotiating the terms with your broker? Is there a lot of flexibility, or is it pretty fixed? It's take it or leave it?
Nothing is fixed.
Nothing is fixed. Everything is negotiable.
Everything's negotiable. Anyone who tells you otherwise is not saying the truth.
Yeah.
You know, everything is negotiable. I think, you know, right now it's a buyer's market. You know, you'll always have you know, developers or sellers are willing to come to the negotiating table and give you a better deal. But at the end of the day, it's on the investor side to show that he's serious, because you do have a lot of people that tend to come in and just looking at watching and not even actually putting serious offers. So, you know, if you're a serious buyer, then and you show that to the developer or the brokers, then you can negotiate a price or a payment plan in today's market.
Yeah, and so and if you do find the broker you like, it's good building up that long-term relationship with an individual or an individual brokership.
100%. I mean,
so that they know it's not a one and done deal with you.
Oh, 100%. And you know, from my personal experience, you know, I had a property that I bought in 2007, sold it to a broker. A broker sold it for me in 2013. I used the same broker in 2017 or 16 to buy my own house. So, you know, it's definitely a long-term relationship. I definitely advise you to keep that broker working, because then they also have all the information that they're willing to share with you. They'll tell you what the market price is. They're in the market, so they'll actually be good sources of information for you. So yeah, definitely it's a long-term relationship with the broker.
Okay, so you've done your due diligence. You've figured out what a good price is. You've decided you're going to buy in the secondary market, or you might have decided to go off plan, but you've chosen a good broker too. Then you have the decision of what kind of property and where. So there's so many options. There's apartments, villas, townhouses. There's size of the property. Does it have a pool? Does it not? You're looking at the service charges. What are the different things that when you break down, if you're looking at this from an investment point of view and not
investment,
your house,
not end use.
It's not your end use. What's the checklist of things that you need to make a decision on, and how do you choose?
Well, as an investor, sorry, you need to look at yields, and some people tend to say, okay, I want the highest yield, and that's possible. But what ends up coming is, if you look at some areas that provide high yields, the vacancy risk is high, the capital appreciation isn't really there. So as an investor, my advice is you need to weigh it up. So between yields and capital appreciation, because you'll see that some areas might have a lot of supply coming online over the next couple of years, which will compress prices. But short term, you might see some decent yields. So my advice is to have a weightage between capital appreciation and yields. And you asked the question right now. So do you look at an apartment or a townhouse or a villa? And obviously it goes down to budget, because as you go to a villa, it gets high. So, but I think right now there's a trend towards townhouses and villas, especially after COVID. But my opinion is, I think that's a short-term thing. A lot of people are saying, "Oh no, people always will want that outdoor space, and that's what they're going to migrate to." I think I differ there. I think there is value there, but I don't discount the apartments at all, especially in central areas like Business Bay, downtown Dubai, DIFC. Those areas will always have value. So. Again, it's down to budget, what you're going to go for budget, but also have yields. Look at your yields and capital appreciation potential.
Right. Okay. So that's some great advice. So you're now, and when it comes to things like service fees and determining occupancy levels, again, that's data that's available. And what are the numbers you should be looking at? Is it your service fees per square footage?
Yes. So the highest cost that eats into yields in Dubai are the service charges. And I think they've done a great job with the land department and RERA and basically looking at ways of reducing that. So before, the service charges were in control of the developer. Now they've taken that away, and it's part of the MLAC system, which is with the land department, whereby service charges are being reduced, because that for a long time was eating up from the yield. So definitely look at the service charges. That's information that's available. You can check it online. The developer will give it to you as well. When you're buying the property, they'll tell you what the average service charges is. So service charges, definitely look at it. It's super important. And what was your second question, Chris? Service charges and...
so that's a very good question.
And the information.
Okay. So where do you get this information from?
Okay, so service charges is
occupancy level.
Okay,
occupancy level for the area you're going to buy in, and service.
Oh, you see, occupancy level is a number that's difficult to get, and with stake, you need to tie up with a service provider, which is like Readymade, as I mentioned earlier. That's not readily available information in terms of where you're buying in the building. So you would need to go through a service provider, someone like Stake. I know some, as I mentioned, brokers are offering that. So again, to answer that question that you asked me before, is which broker do you go with? Go with brokers that also have access to these data platforms, because they'll have occupancy rates, they'll also have service charge information.
Okay. So like any form of investment, timing is everything. And there's obviously a lot of talk right now about is now a good time to buy property in Dubai? Are we at the bottom of a slump? Market's going to go any lower? Give us your point of view about, is now a good time to buy? And I think you mentioned something for me quite interesting earlier on, which was replacement value, which is, I think, really, really important. So is now a good time to buy?
Well, to go back to that point, is at any point when you're buying real estate at close to its replacement cost or below its replacement cost, it's a fantastic time to buy. And I think, today we're at close to the bottom of the market, if not reached the bottom. I don't see any more downward pressure from here. There's a lot of things that the Dubai government are doing, from the long-term visas, the retirement visas, no need for a sponsor anymore, to open up a company. So there's a lot of things that are happening right now to actually push the market up. Now is a great time to buy, and you always hear different people saying different things, but I think, you don't have much downside from here. And we saw this back in 2009 when the financial crisis happened, and a lot of people were waiting for the real estate market to fall again, and before you knew it, it just picked up. And Dubai is all about the market here is very much based on sentiment. And I think the way Dubai handled COVID and it's unbelievable. I mean, it really is unbelievable. And the way they've positioned themselves, with the fact that they're opening up with the visas, as I mentioned. So there's a lot of good things happening that I think more people will come into the region and coming into Dubai specifically and putting up investments here. So before you know it, you wake up one day and you see that the price of the property in your neighborhood has gone up. So definitely it's a great time to buy. I think, as I said, limited downside. Also, a lot less supply coming online.
Yeah.
Which will obviously help the prices long term. And I think people, whenever there's a discount at a shop, people go, right? Whether it's clothes, whether it's food, whatever it is, people go when there's a discount. There's a discount pricing in real estate today. A big discount in real estate today. And I think people need to understand that if you do want to participate in the market in Dubai, you're at a very, very great time right now. So definitely this is a fantastic time to buy.
All right, the last question is more of a functional one, which is, someone who hasn't bought property before might not know the actual, the bureaucracy involved, the steps you actually have to go through before you get the title deed and say, I own this. So could you talk us through the life of, owning, buying? So you've decided you want to make an offer. What next? What are the simple steps that you go through? Because it's different in every country, right?
Yeah.
So.
Actually, I'll tell you, it was a lot harder before. It's gotten a lot easier in Dubai. But simple. You make an offer, the seller accepts. You agree. You have to exchange the documents, which are an MOU. If you're starting with an MOU, and then when you get it, you have to exchange your passport. You need your passport, seller's passport. You agree on the price, and then if there's a mortgage involved, you need to get the bank involved. But if there isn't a mortgage involved, then you exchange and you go to a trustee office.
A trustee office.
A trustee office, which they've set up over the last, I would say, 4 to 5 years.
Yep.
You go into the trustee office where the exchange is actually done between you and the seller, whether you're exchanging the cash, the check, or the bank transfer, and then the title deed is issued at the trustee office. Now, it's still a headache. You still need to go somewhere physically. I know during COVID they were doing it online, but still there's a lot of paperwork involved behind that, which is what we're doing at Stake is it's all done digitally. And as an investor, you don't have to go through all that. We will take care of all that for you. And one thing that we always say is you can invest in real estate on Stake in less than 3 minutes.
Yeah.
So that's the beauty of taking it onto our platform. But yeah, that's the process of buying real estate when you're doing it direct.
And it's the whole thing. It's the sourcing of a great deal.
Yes.
Done.
Oh yeah.
Hours and months and weeks and work.
Of
is
viewings.
Done by, no more viewings. So all of that process of finding is there. All of the information about is this a good investment or not is there. You don't have to go and try and find it in different types of places. Speak to someone who's going to give you wrong advice. Then you decide you're going to make an investment. You decide how much or how little. You might not want to buy the whole property, all the way to actually you don't have to worry anymore about, and we haven't even come on to managing a property, but the process of owning it. You don't have to go through the hassle of going to a trustee. That's all done for you.
Yes.
And then with Stake as well, once the property is owned, you don't have to deal with tenants.
Oh no.
Nothing.
No. We take care of all that for you.
Yeah. So all you do is collect your dividends.
Yeah. Everything's online. You can off your phone, you invest. You start seeing the returns, you earn income, and you see that income straight into your wallet. So you don't have to deal with management or a pipe breaking down or a tenant calling you, nothing.
Yep.
We take care of everything for you, and we pay you the dividends or from the rent straight into your wallet online. So yeah, very simple, straightforward, and transparent process.
Rami, thank you very much.
Thanks, Chris.